Hey. Proud to go live here. Brian Sewell here with Guild Mortgage. I got my good friend Marquise Tolbert with John Pierre, right? Realty. How you doing? Can you hear me okay? Marquise, you there?
Jean Pierre, I am here like I'm getting double feeds. Give me 1 second to turn down. I can hear you. Can you hear me?
Yep, I got you. Can you hear me now?
Gotcha. Yep.
Let's go.
Not sure if
Uh,
they can hear me on Instagram because the feed is doubled. So just gonna check a couple of things really quickly because I had to mute the volume.
okay.
Let's see. Eris, I see that you're there. Eris, can you hear me okay? Is my volume coming in?
We can see the comments here. Yeah, say something in the comments if you can hear us.
Can you guys hear us? All right, so we're good. We're being heard clearly. Thank you.
Good. I'm gonna give a few minutes to let some people jump in. Um, so again, Marquise, you want to go first? Introduce yourself.
Sure, Marquis Tobert, aka your favorite agent's favorite broker. I'm a designated managing broker of John Pierre Realty, located in Illinois, Georgia, and working on a couple of other great states. I've been in the industry for over a decade, hundreds, nearly thousands of families served within that time, specializing in everything from first time home buyers, house hacking, investment, and all sort of other things related to real estate and within that realm.
Good. Love it, man. Good people. Yeah, we decided that we're going to come together and try to get some knowledge out here about we call it real talk real estate, right? Just real estate talk that we're trying to educate consumers about the game. We got a lot to talk about. Short period of time today. Um, for those that didn't hear, my name is Brian Sewell. I'm with Guild Mortgage. I'm the managing branch manager here in Frankfurt. Been in the business for 23 years. I feel like I'm becoming an old man, but I'm still young and energetic, right? So I know the game. So there's so many things that we could talk about. And, we're going to tailor this and do different things each week to try to get as much information to you so you can make good decisions in this market. So feel free to ask questions. We love participation. I know sometimes I think the algorithms suppress some of the people that can jump in, but we definitely want you to let people know that we're going to be doing this on a weekly basis at 10 a.m. So we start off a little late today. Technology will get better and better each week. Promise you that.
Absolutely, absolutely. Thank you so much for that, Brian. Definitely a pleasure to be sharing the stage with you. This is something that I've been kind of reaching out to you for. We've been kind of talking about it like for the last couple of weeks, trying to figure out time slots to kind of put things together. But just to put things in perspective, one of the things that I wanted to do was basically be able to bring the information from the people that are actually in the industry, right? Because as we go through this new wave of the internet and social media, so on and so forth, there's a lot of information. And then, us as professionals, we have clients and customers, consumers as well coming to us. And they're kind of like, well, I kind of seen that, you can do this way. And, just kind of like, let's just go ahead and be myth busters and be able to expel some of those things as well as explain how some of these things can come together. And one of the things I wanted to talk about is because I have a lot of entrepreneurs that reach out to me on a regular basis and they're like, listen, I want to get into the real estate game. I want to diversify. I want to be able to build wealth. I want to be able to buy. However, I'm a new or I'm a fresh startup business, either that or I'm a business that, ultimately like we're operating and we haven't necessarily put our paperwork together, so to speak. And so from there, I gave them a couple of ideas on things that they may be able to do. And then I said, well, you know what? Brian would be a great person to be able to explain it on the financing end as to how some of these things come together. So one of the first things I wanted to talk about was the actual DSCR loan. And
Yep.
Brian, you can kind of break that down a little bit, like and get to your expertise. I'll slide back a little bit.
Yeah. So Yeah, it's called the debt service coverage ratio loan. And so if you're self-employed, and technically sometimes you don't have to be self-employed, it's a business loan. You can uh, buy it in a business name. It's basically going off the income of that property. The property matters the most, right? So you're not doing 100% financing on these or 3% down. You're going to be putting some money into it, at least 20% down on these. And then we look at it, the PITI is divided by the rent. So that's how they come up with the debt service coverage ratio. So
Okay.
what that looks like, go ahead.
Sure, sure. So what this says is, so ultimately, like, let's just give a scenario. So the property is, let's just say it's $200,000 to make the number round. They would come out with 20% of that 200,000, correct?
So
And
yeah,
go ahead.
so $40,000, right?
Yep.
And then whatever that payment is, the rent that they're going to collect, and the potential rent, right, has to cover that at least. The more it covers, the better off the terms and things of that. So, like for example, let's say you were collecting $2,000 a month in rent, and your mortgage was $1,500. So in that case, you take 1,500 divided by 2,000, you're at a 0.7. Sorry, you're at a 1.3 or 1.33 debt service coverage ratio percentage, right? So that's good. So that means you over 30% profit there. In typical traditional ways of doing business, let's say you and I were buying that same property and we were doing like a conventional or FHA loan, we would take the total rent times 75%, and that had to cover the mortgage. And then some, right? So all the for the property. The reason they take 75% because they expect a 25% vacancy. In this scenario, you're putting down a large amount, and they're expecting the property to cash flow correctly.
Okay. So more down, but ultimately for these DSCR loans, what are the qualification criteria for this? Because I know, like, if you're talking the traditional, conventional method, we're talking debt to income ratios, we're talking credit worthiness, so on and so forth. So what are some of the criteria it would take for someone to be able to amass this? Not only the having the down payment, but what other things would they be required?
So think about it. If we're not looking at the income, the other things matter more, right? You're going to put them. It's kind of like like say if someone lost their eyesight. Bad example, right? Your ears are tuned in, right? Right? There we go. You're parables, right? But no, but everything else will be more in tune, and it goes with the same thing. If we're not verifying your income, they're going to be looking at your credit. That's important. Now they have a minimum credit score of 640, or an exception 660 is the norm for these DSCR loans, but we'll call it 640 for an exception. We're going to be looking at how the property cash flow, right? They're going to really look at that appraisal, make sure it makes sense. So that's really what comes into those things that come in. So, but as far as like verifying your income and even assets, it's not as bad as you might think it is. We have to season it for at least 30 days. So if you had money 6 months ago, we're not going to go back 6 months ago and say, where'd you get the money? Now they want to know, if you put a large deposit in the last 30 days, they want to know where that money came from.
Okay. So 30 days of seasoning, is that what I'm understanding as far as the down payment amount?
Correct. So another thing that came up, and we were talking about this yesterday, large deposits, right? So it must be sourced. 10% of your loan amount. So if you had a $500 property, 10% is 50 grand. So I think that's very generous. So even if you had a large deposit come in, if it's under that 10% of the loan amount, you're okay. So that's, so again, they're very generous when it comes to that. So I think that's pretty lenient, I should say.
Okay, just breaking it down a little bit further, just so that I'm making sure that the audience understands it a little bit better, and make sure that I even understand it, like, as best.
I'm learning always too, so come on.
With clients. So as opposed to going like, regular, like, conventional loan, this is going to be based upon the property actually cash flowing within it. So being able to make the rent. So, this is one of those loans that, you do need to obviously like consult with the professional within your local real estate market. If you're in Chicagoland or Georgia, Atlanta adjacent, then I hope that you choose Marquis the Broker and John Pierre Realty, obviously. But that being said, you'll need to know what the actual rental income or the rental comps will be for those areas. So you will, obviously need an agent to be able to like make sure that the property makes sense from the standpoint of being able to meet that threshold. And what was the threshold as far as rents on like maybe a 200,000 home?
You want the rent is you want basically the rent to be able to cover the mortgage and then some, right? You don't want it to be equal, right? So let's say your mortgage is 1,500 and your rent is 1,500. Can I get away with that? Yes, but you're right on the line. You have no room for mistake. There's no profit in it, right? I mean, unless you're in any loans you're talking about doing, the only way you would do something like that is probably for tax purposes. You want to make the object of the game is to make some money, right? So the whole purpose of what you're looking at is okay, make sure that the total rent or the gross rent has a profit on it. And the example that I gave earlier was 1,500 mortgage and a $2,000 rent. That was 130% profit ratio on there.
Gotcha. So you're making some money. You're making sure that obviously the debt has been serviced, like that's part of it, and then you're making an incremental profit, and then you can obviously measure your profit. So that's great. So 640 credit score on that. You will need
660 is the minimum. 640 they can get an exception on. If it makes sense. Yeah.
Okay. Got you. Get exceptional 640. So you're looking really to be between 640, 660 to start the game.
Yep.
With that. Okay, great. In addition to that, you got to have that 20%. But within it, you're not providing standard docs that you would provide with a conventional loan, such as
pay stubs. We are asking for your bank statements, right? So we want to see the deposit, but pay stubs, W-2s, tax returns, we don't need that type of stuff.
Okay, great. Oh, I'm glad that we talked about this. So I did have a client that asked me about that, and they were looking to open a daycare. They were wondering if they could do that with the daycare, and I'm like, I don't necessarily know, how that would work. And they were like, well, they would potentially have a business plan outlined for it. Have you seen something like that happen, or what kind of? Go ahead.
No, go ahead. Finish your question.
Oh, so what kind of things have you seen anything like that happen? Because they're looking for single units, obviously, for daycare, and they're saying, okay, well, we make so many hundreds of dollars per enrollment, and so we have a enrollment portfolio, and they're saying, okay, well, we want to be able to leverage that to be able to use that as the income for the actual property. Have you seen anything like that be able to work within this loan?
But I would think it would, and we would have to ask our investor. But here's the thing: if you're a daycare, wouldn't you go sign a lease if you weren't buying it? Right. So that daycare is basically would be the tenant. So it goes back to that. Said, okay, so is the rent going to cover the mortgage? Okay, and then obviously knowing what that business plan is going to be like. But if you're doing a debt service coverage ratio loan on that particular product, you would just have to make sure those two cash flow. Now, obviously, going into more details, you being the tenant and the owner is a little different, right? But it's just almost the same thing as you were paying rent. You still would ask for a lease.
Mm-hmm.
So I would think that'd be fine. We also have, they could buy the property. So that's a business loan. So you technically can use it as a business. So I would probably down a little bit more, get more details on it, but with all the options that we have for the business loans up here, and I'm just looking at some of my notes over here, whether it's no ratio loans or we're looking at the bank statement loans, it's that DSCR loan probably would work best for that particular loan, but we would probably just need to get at least to have a business plan on that.
Okay, have a business plan to kind of see, how you're set up, what kind of income that this generates, and would you
want to have a history too? So for example, you just can't say I'm starting a daycare and I've only been doing it for 2 months.
Okay.
That's they don't have any history. That's basically what credit is used for, right? The history of how you pay your bills and things like that. So they're probably going to want to at least a 2-year history of you being self-employed. Matter of fact, I know they're going to want a 2-year history for being self-employed.
Okay. To be able to do that kind of business.
Right. So that particular business, we need 2 years for that.
Okay, great. And so you guys are looking for basically profit loss statement, tax returns on that kind of business?
Tax returns wouldn't be used for the income portion. What we probably want to see is a business license or maybe a letter from an accountant. There's different ways of getting around that without seeing the tax returns.
Gotcha.
If they want to show tax returns, then that probably means we don't need to do a DSCR loan. We could probably do a traditional loan if they have the income showing that.
Gotcha. But yeah, I think a lot of them, the problem is that when you talk about that, they would want to go DSCR because obviously, everybody that has businesses make $0, right?
They try to, right? They try to show, Uncle Sam hits us up hard enough, right?
Yeah, absolutely. So so business plan, business license. Well, business licensing would be very important within that to show that you've been established in this business. Okay.
They may want some from a letter from an accountant, things of that nature.
Okay, sounds good. Sweet, sweet. All right.
We're answering questions. I see a couple of people over here on Instagram Live. I hope you guys are doing well. If you guys have questions, please ask. That's part of the reasons why we want to do this. This is all educational. Let me just make sure I have all that in. This is our first go run, so we're making sure everything is up and running.
Thank you guys for joining. Thanks you guys for joining. If you have any questions, please feel free to jump in. With that being said, let's get back to it. So just kind of taking a look really quickly through. So we covered the DSCR, and I know that there was, I'm looking for time purposes because that was very robust. That I like really being able to take a deep dive and get the questions answered for that. So one of the things that we talked about were also 1099 loans or loans that are for specifically for persons that have their own businesses or that are considered non-employees or self-employed.
Yeah, so we call that the real estate loan. Not to pick on y'all, but no, you have to be. We just have to see the 1099. We're not going to look at your tax returns. So what makes this is a game changer right here, guys. So where you'd be saying, let's say somebody made $100,000 on a 1099. You take that to Uncle Sam. You have some expenses. You're gonna write that off. Your income may show $40,000 on tax returns, right? Because you wrote off some stuff. You got expenses. You got taxes, things of that nature. Well, we can get away with using the 1099 income. There's a credit score limit. I don't have the notes in front of me. I mean, this is a brand new loan they just brought out the last couple of months. But I believe the credit score is very similar. I think it's 660, the 640 exception. But it's a really cool program just for being able to, for those that are self-employed that have expenses, not just maybe it's more expenses than someone that's just making 100,000 straight. So but you're still able to buy a home for yourself or for a business, right? You can still get the DSCR loan, things of that nature. But that's a huge game changer just for the fact that I don't have to look at your tax returns. And the rates aren't that bad, particularly what I want to talk about. And I know you didn't bring up rates, but even that loan, if we're talking to, and this goes for everyone, but there is discount too. We have what we call this a CDFI lender, which is Community Development Financial Institution. And what that allows us to do is we give discounts for Black, Hispanic, or someone that's disabled. So we were looking at a rate yesterday for someone on the DSCR loan that was getting 6.99 on the 30-year fix. Which normally, and I'm talking about this from being in the business for 23 years, normally when you're dealing with self-employed borrowers, their rates are usually about a point or so higher. We talk about some of these alt-aid programs, what we call alt docs, right? Not traditional. And in this situation, you're not that far off. Again, it's different because you're putting more money down. So you got to have some money to this. This is not going to be using any down payment assistance programs of that nature, but you're able to get into a house, be self-employed, and still really, not be that much off. Back in the day in 2008, and I don't want to dwell on this, but prior to 2008, I should say, self-employed borrowers, they would do bank statement loans or they would do 2-year ARMs and the rate would be 8-9%. And even some of the other stuff you hear out here, these rates are very competitive. So that's one thing that I was impressed about.
Absolutely. Like to be able to touch upon that, because I know that when I was talking to lenders about, some of the self-employment, we're talking 8, 9, almost 10% to do that. So to be able to be almost on par with, what some of the rates have kind of dissipated to is amazing. And so this is for, again, minority borrowers as well as as well as disabled borrowers as well.
Yeah, so the discount is for that. So that's the loan is for everyone, but because it's a Federal Reserve bank that's back, it's borrowed funds from the Federal Reserve. They're giving a discount for those.
Sure. Is this something that has a time limit on it, or is it until funds or things are exhausted, or is this just going on for now until?
It's just they haven't put a time limit on it for us right now, so we're on it. So I would say jump in. Rules change with different things.
Hey, if you can send me some information on that, that'd be great. Like, so we can kind of get the information out to various, clients, consumers and whatnot that are interested. Like anyone in the chat is interested in that, definitely drop me or Brian a DM so that we can kind of get started.
Yep. So I love that we have this opportunity to share and get this type of information out. When you think about some of the challenges that comes to buying homes, for self-employed borrowers traditionally.
Yes.
It's been, you know, I do have one loophole, and I'll share it, but don't let me forget to share it before we get off the call. I know we got a few minutes for self-employed borrowers if they want to go traditional. So I'll tell you about the loophole there. You have to be in a business for at least 5 years to do that. So don't let me forget to share that. But just having some other programs that you want to get into, that you want to have a home base for your business, whether you talked about the daycare, or if you want to have, just get the American dream, right? You're starting your business off. Now you got to be in it for a couple of years, but this can help you move forward in a good way. And it's good for people to buy homes, good for families. So don't get off the soapbox.
I would say on average over the last, I wouldn't even go as long as my career, but over the last 5 years, everyone that I've sold a home to has been positive on the equity side. Like they've been able to do other things. And so that's where the wealth is. People, when they say, well, there's no money in, single family houses. And I said, right. That's why like all of these companies are only buying single units right now, because there's no wealth in it. It's kind of like, ultimately, like if you ever been on a train and they are playing that bean trick where they're kind of moving the bean, like, you're trying to like kind of pick. It's like, okay, listen to the professionals, listen to the people that want you to ultimately acquire this wealth and want you to have a home and want you to have a piece of the pie. Don't listen to like, these so-called experts that tell you not to do it. And then they're turning around, snatching up all of those single family homes and single units. So it's the reason why they're doing that. There's going to be a cosmic shift even within the commercial landscape, like a lot of major building businesses, a lot of major metros. Like if you look at New York City, you look at to a smaller scale, neighboring us, St. Louis, like their downtowns, and even our downtown isn't what it was. So a lot of that commercial business is now going to be turned into residential, I believe, at some point.
That's good. Yeah, and I think what you're seeing, or what we're going to see in the future, this will open up more doors for more people to jump in. Help small business owners. And we didn't hit on this really quick. I'm looking at the clock. Make sure that for those that want to get into real estate and buy properties, but yet maybe your debt to income ratio is too tight to go traditional, this allows you to do that too. So these programs, so you're allowed to get in the game.
Oh, right. Really quick before we cut out, you told me to remind you about the loophole, like within business owners if they've owned their business.
Oh yeah, so I was gonna forget. So thank you. That was like a couple of minutes ago.
Hey, that's what we're here for, right?
Yeah, exactly. Teamwork. So here's the thing, guys. So Fannie and Freddie, those are pretty much the insurers of conventional loans. So you think about Ginnie, that's FHA and VA. So they're good in different ways, but I like Freddie's take on this. So if you're self-employed, you got to prove that you've been self-employed for 5 years, and we're coming up. This is October, so this is for those that's been in business for over 5 years and they want to get the best rate in the market. That's what they really want, right? And I don't blame you for that. Well, file your taxes in March, right? We only need 1 year tax returns if you've been in business for 5 years. So what does that mean? I can't tell you how to file your taxes. They don't allow us to do that. That just means you show me 1 year tax returns. You've been in business for 5 years, and we make it work. So I'll leave it at that.
Or Brian can't tell you, but if you need more details, you can certainly call me and I can interpret that.
Right. Debt to income ratios and stuff like that. But I'm just saying that'll give you some flexibility. So whatever the market rates are, you'll get those. You only need 1 year. So again, that's just for the self-employed borrowers, being creative there. We're always here to help.
Absolutely. Well, thank you so much for your time. Like, we're going to wrap things up. Like, I'm going to take a look at the chat really quick to see. I hope that I answered the question as it related to the daycare, because I see that it's in the chat. I do see like an actual couple people that do own some businesses in here. So hopefully like we help you guys. If there are any other questions, definitely feel free to contact us. Brian, what's the best way to contact you?
Oh, it's 630-352-0629. And then what about you?
Well, you can contact me on the social media handles, Marquis the Broker, at Instagram, Marquis Tobert on Facebook. I'm everywhere social. You can contact me there. Send me a direct message. My number is also there. And if you click on my bio on Instagram, there's ways to schedule a consultation, so on and so forth. So definitely feel free to hit me up any questions that you may have, any comments, concerns. feedback. Please give us some feedback.
Yes,
Is there anything we can do better? Like, I'm dedicated, as well as Brian, to being able to bring you guys more content, more information on a weekly basis. So thank you all for tuning in. Very thankful and appreciative. And we'll catch you guys next time.
Yeah, we'll be back next week.
All right. Take care.
Yeah.